So we need to really get to the bottom of what we're talking about when we're talking about adverse credit, because all too often the horror stories of bankruptcies, that's what people are thinking of when they get the badge adverse credit.
So I think one of the biggest misconceptions with this part of the market is that brokers think, I don't have these customers, I don't work in impaired credit, I don't have adverse credit customers in my client bank or in my local vicinity, that's not my part of the market. When I think it's absolutely fair to say, looking at the numbers, that most brokers do, those customers do exist within your client reach, and therefore it's really important to address that.
The adverse credit study spring 2021 revealed that 52% of adults are still concerned about having a mortgage application decline due to adverse credit. Yet only 6% of homeowners who had adverse credit went on to experience their mortgage application being declined. This to me represents a significant gap in perception and begs the question, what more do we have to do to perhaps educate society?
I think the biggest issue raised by the study that needs to be addressed is the disparity in the way that COVID has impacted people's finances. There's a clear divide in the fortunes of those who have experienced adverse credit in the last 3 years and those who have not. For example, whereas less than a quarter of the general population say their income has decreased in the last year as a result of COVID, more than a third of adults with adverse credit say the pandemic has resulted in a reduction to their income. Consequently, nearly a quarter of people with adverse credit say their use of credit has increased compared to 12 months ago, compared to just 13% of the general population.
There's lots of really important information in this, and well done Pepper Money for an excellent study again. But one that really stands out to me are the amount of people that believe that they're going to have to wait at least 5 years to get a mortgage after they've had their county court judgment. So it's 23% of all the people interviewed believe it will be more than 5 years, and actually 39% don't know. And of course you can get a mortgage with county court judgments as little as 6 months after they've been registered.
I personally believe one of the biggest misconceptions is that clients believe they're unable to obtain finance when they have adverse credit recorded. I think the opportunity therefore exists that both in society and within the industry to raise awareness and to raise understanding of exactly what adverse credit is recorded for each individual unique client, help them fully appreciate why the adverse credit was recorded and how it was obtained, and then work with someone suitably qualified and suitably experienced in order to search for the most appropriate mortgage solutions that may be available both now or in the near future.
So I think both as an industry and as a national media, we need to do more to highlight the mortgage opportunities in this space. We need to dispel the myths of sky-high rates, poor procedures and trap conditions. They're not there anymore. The market has changed considerably over the last few years. Access is clearer, the products are transparent, and there is help and advice available.
There has been lots of positive commentary around the amount of money people have been able to save throughout the pandemic, and this has given some the ability to reduce outstanding debt. However, the adverse credit study from Pepper Money really shines a light on the other side and the impact that is being felt by consumers. To address the misconception around adverse credit, I believe removing the stigma that's attached is key. Normalising the fact that having adverse credit is something that can happen to anyone, and that this shouldn't and quite often doesn't stop you fulfilling your financial aspirations, such as buying your dream home.
A couple of things have struck me from reading the latest excellent report from Pepper on adverse credit. The first is the number of consumers who still think that having adverse credit will have a detrimental effect on their ability to get a mortgage, when in fact the actual number is nearer 6%.